Artificial intelligence, it's in our headlines, our phones, our jobs, and even our fears. From McDonald's drive-thrus to Wall Street predictions, AI has become the new oxygen of the digital world. Every company claims to be AI-powered, every investor wants a piece of the next big model. But behind the buzzwords and billion-dollar valuations, a question looms: is this innovation or inflation? AI has been called the next industrial revolution, but revolutions build empires, not bubbles.
So we know what the technology is able to do, and that's very exciting in itself. It's transformative completely in itself.
It all began in late 2022, when OpenAI dropped ChatGPT. Overnight, AI went from research lab curiosity to household phenomenon. Google panicked, Microsoft moved in, it became the fastest-growing consumer app in history, hitting 100 million users in just 2 months. Suddenly, the world realized AI wasn't just research, it was real, it was useful, and it was everywhere. Then came the gold rush, image generators like Midjourney and DALL-E, video creators like Runway and Pika, voice clones, chatbots, and AI co-pilots in every app we use. The age of prompt engineering had arrived, and the world couldn't stop talking about it. OpenAI reportedly spends up to $700,000 a day just to keep ChatGPT online. That's over $250 million a year, on servers, chips, and electricity. And guess what? The majority of AI companies don't own those chips, they rent them from Nvidia. For years, Nvidia was known as the king of gaming graphics, powering the world's most immersive video games with its GeForce GPUs. But when the AI revolution took off, those same chips turned out to be the gold mines of a new era. Nvidia just became the first company in human history to reach a $5 trillion valuation in October 2025. Almost 90% of Nvidia's profit comes from selling GPUs to AI companies, and most of those companies aren't profitable, they're funded by venture capital. Which means Nvidia's growth depends not on customers, but on investors' belief that AI will soon pay off. OpenAI is valued at $500 billion after raising $40 billion in March 2025, the largest funding round in history. They're losing $5 billion a year. How do they justify that valuation? They signed a $500 billion deal with Oracle over 5 years to rent data centers. 2024, private investors poured $252 billion into artificial intelligence, that's more than the GDP of Portugal. Microsoft alone is spending $80 billion in 2025 on AI data centers, Amazon spent $105 billion, Meta $65 billion, Oracle's stock jumped, adding $333 billion in market cap in one day. But Oracle's already losing $100 million per quarter on that deal. Meanwhile, Nvidia owns stakes in companies that buy Nvidia chips. Microsoft owns 27% of OpenAI. OpenAI buys from Microsoft's cloud. It's a circular financing machine where everyone's investing in each other. 498 AI companies are now worth over $1 billion each. That's nearly half of all new unicorns created in 2024. Their combined value reaching $2.7 trillion. But here's what they're not telling you: 95% of companies using AI right now are seeing zero return on investment. 2024 saw 32 new AI unicorns born, that's 44% of all new unicorns that year. These companies are reaching billion-dollar valuations in a median of just 2 years. Compare that to non-AI startups that take 9 years. Mira Murati's Thinking Machines Lab, $2 billion seed round at $12 billion valuation. A seed round at $12 billion, that's insane. Healthcare AI is exploding. Abridged Clinical Documentation reached $5.3 billion valuation after $300 million Series E. OpenEvidence AI's search for doctors reached $3.5 billion on $210 million Series B funding. Median revenue multiples for AI companies hit 25 to 30x in private funding rounds. That's 400 to 500% higher than comparable tech sectors. Palantir trades at 200 times forward earnings. During the dot-com bubble, the Nasdaq 100 averaged 60 times earnings. By July 2025, 130,981 tech workers lost their jobs across 434 layoff events. Microsoft reported $70 billion revenue in Q1 2025, up 13%. Then cut 15,000 jobs.
Here's the part that should terrify investors. These AI companies are losing money on every single customer, losing massive amounts per subscription. A single AI query can cost 10 to 100 times more than a Google search, and it doesn't scale cheaply. Microsoft's GitHub Copilot charges $10 per month for individuals, $19 for businesses. In early 2023, Microsoft was losing an average of $20 per user per month. Some power users were costing them $80 per month, 8 times what they were paying, but they keep pushing it everywhere: Outlook, Word, Bing, Windows, because they have to. If they don't, the markets will think they've fallen behind. OpenAI charges $20 per month for ChatGPT Plus. They have 12 million paying subscribers. That's $240 million in monthly revenue, right? But Sam Altman admitted in January 2025 that they're losing money on the $200 per month ChatGPT Pro subscriptions because people use it much more than we expected. OpenAI's 2024 numbers says $3.7 billion revenue, but they lost $5 billion after operational costs. By mid-2024, they'd already burned through $8.5 billion on AI training and staffing. They expect $13 billion in revenue for 2025, but they're spending $60 billion on the Oracle deal alone over 5 years. That's $12 billion per year just for data centers. U.S. data centers consumed 183 terawatt-hours of electricity in 2024. That's 4% of America's total electricity consumption, equivalent to Pakistan's entire annual demand. By 2030, that number will hit 945 terawatt-hours globally. That's more than Japan's entire electricity consumption. A typical AI data center uses as much electricity as 100,000 households. The largest ones under construction will consume 20 times more. Training GPT-4 required 30 megawatts of power. Between 2024 and 2030, data center electricity consumption is growing 15% annually, 4 times faster than all other sectors combined. AI-optimized servers are projected to quadruple their electricity demand by 2030. In the US, data centers will account for almost half of electricity demand growth through 2030. Data centers consumed 17 billion gallons of water in 2023 just for cooling systems. By 2028, hyperscale data centers alone will consume between 16 billion and 33 billion gallons annually. That's water that could serve millions of households. Natural gas supplies over 40% of electricity for data centers. Morgan Stanley estimates the industry will emit 3 times more greenhouse gases by 2030 than if generative AI had never been developed.
In late 2023, Humane launched the AI Pin, a wearable device promised to redefine how we interact with technology. The device began shipping in April 2024. But by February 28, 2025, the company formally shut down its consumer service. All iQueries, cloud access, calls and messaging through the device were discontinued and any remaining data was scheduled for deletion. Humane sold parts of its business, including patents and engineering talent, to HP Incorporation, for about $116 million, a fraction of the lofty valuations it once enjoyed. What began as a high-profile consumer AI gadget became an early emblem of the gap between hype and hardware. Beginning around 2021, McDonald's partnered with IBM to pilot voice recognition AI in over 100 drive-thru locations, aiming to streamline ordering and reduce labor costs. By June 2024, the company announced it would end that pilot, citing mixed results: angry customers, viral videos of order errors such as bacon on ice cream, and accuracy problems with accents and dialects. The system was slated to be fully shut down by July 26, 2024. In the rush to automate, some companies discovered too late that AI couldn't replace human judgment. For example, Swedish fintech Klarna had laid off around 700 employees, citing AI systems behind customer service and marketing tasks, only to admit later the technology fell short and begin rehiring human workers. A broader report found that 55% of organizations that executed AI-driven layoffs now regret it, and many are rehiring or shifting labor back in-house.
A big revolution, and I think this will be at least as big as the Industrial Revolution, probably a lot bigger. That's surprising. There's unknowns, it's scary.
Here's the uncomfortable truth: AI is real. It will be transformative. But that doesn't mean these valuations make sense. The internet was real in 1999, it did change the world. But investors still lost trillions on companies that didn't survive. Is this a bubble? The evidence is overwhelming. Will it pop? History says yes. When? That's the trillion-dollar question. It'll be the biggest companies in the world, millions of jobs, and possibly your retirement account. What do you think? Are we witnessing the biggest tech bubble in history, or the birth of the next industrial revolution? Drop your take in the comments. And if you want more deep dives exposing what they don't want you to know, smash that subscribe button.